Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. One of the things I want to do today is share with you guys one stock that I'm really impressed with. This is one of the stocks that I used to own back in the days, I think over 2 years ago. Since then it's been on my under my radar, and I thought about buying it back and so on, and it kept going up and up and up. So what I would like to do today is see if this company is a buy or not. But before we do that, what I'm going to do is just go over some of the financials and just give you kind of overview, and then at the end I'm just going to give you the valuations of where the companies are right now. But before we do that, if you can like the video, subscribe to the channel, that would be absolutely wonderful. As well as, of course, if you can join us in the Patreon account, where you get access to all the buys and sells. So every time I buy a new stock or sell a new stock, I just add it on, I put it on the Discord, share it with the brothers over there, as well as, of course, sharing all the dividend trackers and calendars and all of that stuff in Sharia compliant investing ebook. And the company we're going to talk about today is Waste Management. This is one of the companies that is based in the US. It also has a works also in Canada. And the main thing the company does is basically collecting all the garbage, all the rubbish, and then transporting it from wherever it was generated to the material recovery facilities and disposal sites and so on. And the company also deals with the landfill facilities that produce the landfill gases used as a renewable natural gases and so on. So they do take care of the environment, as well as, of course, collecting all this garbage from people and then recycling and doing all of that stuff. The stock is right now up about 16% since the beginning of the year, which is absolutely huge. For 1 year, it's up 37%. And the last 5 years is 108%, and the last 10 years 408%. And think about this, this is not a growth stock, this is not a technology company, this is a company that collects garbage and it recycles and so on. And this is one of the reasons I like the stock market, because there's so many companies out there. We don't just have to buy the Nvidias and so on. If you buy this type of companies, quality businesses, and hold them for for the long term, you could easily make it really good returns for your money. Now let's have a look at a bit more detail of the company. Right now it has 83 billion market cap. It has a safe dividend of 1.44% and 74% safety, which is quite nice. It has just PE in terms of payout ratio, we're looking at about 45%, 7% increase. So that was the latest increase in December 2023. Dividend growth streak of 9 years, basically 9%, of 9% in the last 5 years. That's what I'm trying to say. Dividend growth streak of 20 years, and $3 per share is what you will get for every share of this company that you own. Now it seems overvalued based on the dividend theory, because 1.74 is the 5-year average. Right now we're looking at 1.44. So again, it does seem overvalued. And when we look at the 5-year average for when it comes to PE, right now it's about 30. The 5-year average is 27 almost. So it seems really overvalued when you look at these two matrix that we normally use. The couple of other things that I want to look at is the earnings per share ratio, if I can talk. That's basically right now is we're looking at about 44%, which is absolutely fine. Free cash flow payout ratio of 60% as well. Earnings per share has been growing. Free cash flow per share has been growing, and shares outstanding has been declining. Total shares has been going up. Total sales has been going up, which is quite nice. So this is more or less basically this is the revenue, if you like. Return on equity, we're looking at about 33%. Return on invested capital of 15%, an operating margin of 19%, and free cash flow margin of 9%, which is absolutely huge. Net debt to EBITDA right now we're looking at about 2.46. So based on what we see here, it seems a very good business. So in terms of profitability, what the management is doing, our money, the fact that they're buying back their own shares, basically the total sales is increasing, the earnings per share is going the right direction, and so on. It seems a very profitable business that potentially can sustain and keep going. Now going back to Seeking Alpha, we're going to check the earnings side of things. So this is the estimate. Again, don't forget, this is just what they think. This is not exactly what's going to happen. So they think in 2024, all these analysts, 20 of them looking at basically for the next couple of years, 12%, 12%, 12%, which is absolutely huge. So 12% growth every single year for the next 3 years in terms of EPS is absolutely huge. Then after that, revenue side of things, we're looking at about 6.5% for almost every single year for the next 3 years. So the earnings will basically, the revenue side of things will grow from $21.7 billion to, let's say, $24.5 billion in the next 3 years, which is quite nice to see. So looking at Yahoo Finance, as you can see here, next year they're expecting the earnings to grow about 10%, and then 10% every year from there onwards, which is quite nice to see. In terms of their valuations, their average price is $210 per share. Right now it's $207 per share, so not far off. And as you can see, is heading towards a buy right now. And they don't have that many strong buys. Well, they do have 3 strong buys, and then 3 holds, 3 buys and 5 holds right now. Now, if we go back to Seeking Alpha and click the valuations for Wall Street, what you will notice is 7 strong buys, 3 buys, and 12 holds right now. 1 sell and 1 strong sell. Now it's a flat, so there's no upside to this business. So right now what they're saying is fairly valued. Basically, this is where they think the price should be at the end of this year, at the end of 2024. Okay, basically where we are now at the end of 2024, that's basically where they think the price should be. And don't forget, they have 3 prices. Of course, they've got the height of 230, the average 208, which is basically what we're looking at here, and the low of $159 per share. And I think that's what Seeking Alpha Morningstar's actually valuation is. Let me just quickly check. And if you go to Morningstar, as you can see here, it's about 30% premium right now. $159 per share is where they think the price should be. The company, of course, has a wide economic moat. What this means is basically the company has a competitive advantage over its competitors. That's all it means. Basically, they can protect their business from other people entering into that sort of a market, or maybe the market leader themselves. And for that reason, they are the company to go to, more or less. So if we go click trailing returns, what you will see is for the last basically 10 years, the company has returned almost 19% in total returns. Now, one of the important things I always like to check is basically free cash flow. And right now, as you can see, from for the last 5 years, as you can see, 1.77, 2.4, 1.9, and then 1.8. And right now, that's where we are, 1.8. So the last trailing 12 months. So this is solid. Okay, this is not too bad. Of course, it's a bit of a decline here, but nothing huge to worry about, because $2 billion is still $1.8 billion is still able to cover that dividend, as well as, of course, buying back their own shares, paying off any debt, acquiring other businesses, trying to grow that business, which is quite nice to see. And the final thing I want to talk about today and show you is the valuation. So Morningstar, we've seen it $159 per share. Seeking Alpha was $107 per share. The multiple valuations, which basically compares the similar companies in that industry. So, well, 2 companies that we used are West Connections and Republic Service. So those 2, when you compare those 2, $256 per share. And then dividend discount model of $171 per share. So if you average out the 4, you get about $198 per share, which is basically slightly lower than the current price of $207 per share. Is about 4%. Basically, it needs to come down about 4% if we were to buy based on this price. Again, remember, this is valuations based on these people, based on my basically own analysis. So don't take this for basically this for what it is. Just to take it for what it is, but just don't take it as an advice or whatever. And as you can see here, we haven't got any basically margin of safety. And of course, as always, have your margin of safety. I might say, okay, 10% is what I'm comfortable. If that's the case, this will be $178 stock. And you'll just put that in your watch list and leave it there until it hits that price. You might say, do you know what, I want to do 5% because this is a very stable company, in terms of it's not very speculative, if you like. Okay, so $188 per share is what you would then say, okay, that's my buy price, and just leave it there and just let it wait until it hits your price target. And that's it. That's all I wanted to share with you guys today. Again, as always, do your own research. This is a great company. I do like the business model. But for me right now, okay, to give you my opinion, it's not a buy right now. I will definitely wait until it hits either that price or even lower if the market comes down. I used to own this company about 2 something years ago. I sold it when it was, the price was I think it was 130 something. Since then it's been going up every time. I do agree more with Morningstar with this one. They have been saying this company is overvalued for quite some time. 30% premium right now. $159 per share is basically where they think the price should be. And when you read their report, you will see why they've actually decided to say that. So I would say 170s should be okay, but nothing more than that. And again, like I've always said to you guys, do your own research. Don't just rely on this. And as you can see, the portfolio is just ticking along. Things have been going up in the last few months, last few weeks, if you like. I've added another £427 today, so I will be investing that. We're getting there when it comes to the basic maximizing our ISA account, inshallah. So less than £2,000 left to add, inshallah, in the next 3 to 4 weeks. So as always, I'll let you know, of course, what I do when it comes to buys and sells. If you join us, inshallah, on the Discord, which, just trust me, for 50p a day, you get a lot out of that. So basically discussion that brothers are having on the Discord, inshallah. Have a wonderful day. Assalamu Alaikum.